All right. Good afternoon, guys. I'm gonna make a case study on the short that occurred during New York, and it was a nice trade. I'm not trading myself, but I will break it down for you and for myself because I want to see it. Maybe it will turn out there is no trade. That will be fun, and I have to delete this. But yeah, so coming into today, we just took previous daily lows. We had previous daily highs, and that's actually unmitigated. We know where we are in the high time frame. We know that we took this amount of liquidity and we can expect a downside move. Another thing I said is like there's not much liquidity in these areas, so we can see price like maybe trickle down slowly, induce some buyers in the high time frame, and then we can see this low being taken. So therefore, shorts are quite valid setups to look for. We took these highs, then we took like these lows with this wick and closed quite bullish, but then price continued down, and it didn't like how do you say it didn't continue the bullish momentum. So therefore shorts. What's this? Going on lower, it's not like the ideal trade, but it fits the plan in some way. So as you can see this morning, Asia took out this internal high, and which is basically like uh either this high or this high is like the internal range liquidity for this leg. And after that, we got like another sort of disruption of highs because we got the high that leads to this low. We got, yeah, initially it's not the highest high that leads to this low, and we still get Asia high above, but we got that high that leads to low. Price takes it out and pushes down. So basically, that's London. That's the move in London. And price taps into our extreme 1 hour order block. For this bullish leg, we had the high, a low, a lower high, a lower low, lower high, lower low, bullish break, and then we had this leg, and yeah, and we got the internal range liquidity take. So initially longs from here were valid, and you wouldn't ideally look to short there, but there's the setup nonetheless. And if you look at it like this, so we get a high, a low, a bullish break followed by a bearish break. And then this is the most recent bearish 5 minute or 15-minute leg, whatever you want to call it, from this high down to this low. You can see that over here we have this 5 minute POI sitting in the extreme of that leg. And from there we can look for shorts. So what else is there that we can add? We can add that we have internal range liquidity over here, and we have some highs over here that are being taken. What else can we add? All right, so we took previous daily lows and Asia low, which is not convenient for this trade either. So we got like a lot of things that are not on our side, but at the same time, price is bearish and it's continuing bearish. So yeah, it's a decent trade nonetheless. Looking at like, all right, we took these lows, and then we have this high that disrupted these highs. So short is valid from that area. Going down lower, what can we see? So from this place here, 9, 20, 23, we can see price ticking up. We get a low, a high, a higher low, a higher high. Then we got that bearish break over there. So this is our early sellers. Oh, that's not quite clean, my bad. We got our early sellers over here. Oh, this is not working. There you go. This one and this one. Initially breaking the high bullish, then continuing down and breaking bullish again. And then what can we see over here? We see get the price is forming beautiful minor structure. Now, one thing I want to check is did we come back? So yeah, from this low to this high, we have a structure point. So we can actually say we got a low, a high, a higher low, a higher high, a higher low, a higher high, and a bearish break. And that's our entry drill because we have our early sellers taken out. mitigation of the 5-minute POI, taking internal range liquidity, giving our 1-minute bearish break, leaving an order block behind. An order block we want to enter from. However, you can see there's power in this block or power behind that move. So we can maybe zoom out and see, okay, on the 3-minute, there's nothing there. And we got this clean 2-minute block. So let's use the block and take in the high. Take the high as well. And then 63. So it will be there. Stops above the high. This is your trade. And where do you go break even? So on the way up, we create this structure. You can see, however, it didn't break anything here, but we got like, let's just mark it out. We gotta all the way from here, high. Let's just do it all the way from there. With a high, a low, lower high, a lower low, lower high, a lower low, return to discount or the return to premium, then a lower low, a lower high, a lower low, a lower high, a lower low, a bullish break. Where do we get? You go here, you go here, and then this is our like main last leg. So really we want to go break even after reaching this premium. However, we have this block that's still valid and we don't know if the trades will continue. So our stop loss will move to above here after we reach the discount of this bullish leg on the 1-minute. Also, another reason to go be a bit more conservative and aggressive with your stop loss management is because we reached the discount of that bullish leg over here, and that's initially the more major leg, and we didn't reach the premium of this overall high that leads to this low, and therefore we can still target these premium areas. And by tapping into this, I was initially hoping that price would continue up and go for those areas, but that didn't happen. And this might have been the move that would cause that. So therefore, yeah, quite aggressive management, maybe, but that's all right. Still target 1 to 5 though. Always, at least. And we come back, we get a continuation trade over here. So let me just show that. Maybe this. Maybe take a fair value gap. So that will be the continuation trade. After we break that low over here, we put our stops below here, and we reach our target. So that's the trade. Overall, it sits now at 1 to 7.56. So 1 to 6, 1 to 7.6, and that's a clean trade. All right. Oh, one thing though, let's look at the candle formations over here. So what can we see? We can see the strong wick. Let me see if that's inside. And on the 5-minute, we can see that rejection candle, strong bearish closure from this candle, coming in, taking out this last bit of internal range liquidity, tapping in, and a strong bearish closure. On the 1 hour, what can we see? Well, that we can see the same actually. After we took the both liquidity, after we took both liquidity pulls, we can see the price closes back down below those liquidity pulls. And after that, yeah, we just got to push down. So that's the trade. Peace out.